Hey guys, thanks for tuning back into Crypto Mainly. 289 subscribers, guys, so creeping up nicely. Brand new channel, guys, so please don't let that put you off. I've been in the space a long time, but obviously just branching out on my own now, having worked with one of the most famous and most recognized influencers in the crypto space for the last couple of years. I've been in the crypto space for 4 or 5 years myself. So very experienced, guys. So please don't let the number of subscribers put you off, guys. Please do like, subscribe, turn on the bell for notifications. You can always unsubscribe if you don't like the content. Hopefully that won't happen. So please do like and subscribe, guys. Give me a chance to see what we can look at together. Navigate this crypto world together, or at least try to. Over the last couple of days and weeks, it's been very difficult territory. But we'll have a look at what's going on shortly. We can have a look at today. We're going to have a look at what I think some signs of signals of bottoms. So very difficult to call the bottoms, guys. But let's have a look to see what we can work out today. So over on OpenSea, I'm selling NFTs, guys. If you purchase an NFT at the moment, it does entitle you to 6 months free access, complimentary. So once you purchase an NFT, at the moment complimentary, you will get access to the VIP channel, but that won't be forever, guys. So just perhaps consider that for now. And do please be very careful. Make sure you verify my account here. You can see it's cryptomainly.eth is my Ethereum naming service wallet address, and you can see that there as well, cryptomainly.eth. So no letters, numbers, spaces, dots, or anything else after that. Just cryptomainly.eth. That's the way to verify it. To verify the account here. There is a scammer, guys. So the way to be sure is to use the links in the description below. But if you are searching from OpenSea, just make sure that you check my Ethereum address there. Another way, guys, as you'll see on there, the Twitter. If you click on the Twitter link there, it takes you direct to my Twitter account, which is at Crypto Mainly. Again, no dots, letters, anything after that, just at Crypto Mainly. And also, you can actually check out on my YouTube page as well. You'll see that there's Twitter at the top there. There's also OpenSea and Rarible links direct from my YouTube page. So lots of ways to verify, guys. So just be very careful. But do join in. I look forward to seeing you in the group. Okay, so we're going to start with this chart actually today, guys, which is obviously on a smaller time frame here. I mean, Bitcoin, just to give you an idea, I'm sure that you've all been, found things difficult yourselves, but just to give you an idea just how things have been. If we look in terms of trying to trade this, to give you an idea just how difficult it's been, you've got a really nice bottoming pattern here. We came up, we broke the neckline. Okay, we came up, we came back down, we retested the neckline, and instead of getting the bounce that you'd expect, the neckline failed. Okay, so nasty market move there. Yet again, down here we've got a really nice bottoming pattern. Came back up, retest, come back down to retest the neckline. Neckline failed, and we got the failure. So the reason I'm just mentioning that now, guys, is because if we look at what's happening here, I mean, this is a trade that I'm going to be looking for, and I've actually posted this in my Telegram group. So this is the type of thing that you'll get. What I'm looking for is for this neckline here. Okay, so this dotted line to hold, and for us to get some candle body closes above that neckline. Okay, and for it to hold, and then I'll enter the trade. So we'll get some kind of range forming here, and once we break above the range high, that's when I'll actually look to enter this trade. Once the support has been confirmed. Looking at that, but do be aware, guys. As I said, previously, we've got this similar sort of scenario going on again, where you've got a really nice bottoming pattern forming. You've got the neckline again, and as you saw on those last two attempts, there's every chance that we might end up breaking low and continuing even lower here. So just something to bear in mind, guys. But let's have a look at the. We're going to be looking at some signals for the bottom at the moment. We looked at this. We've looked at this chart over the last few days, but I'll just run over it for those of you that haven't seen it before. And I just want to add something to it as well. So for those of you that have seen it, just bear with me. I'm just going to add something to this, which is really interesting as well. So what this is basically, guys, is looking at the previous cycles. So from the lows of the cycle to the high. Okay, you'll notice that from even on the very first one. Obviously, bear in mind the first one. There's not much data to go by. It's going to be a little bit skewed. what with it being, a new, new venture back then in 2009, 2010, 2011. So just bear in mind that this is, this is a bit skewed, but you can still see if we measure from the bottom, which incidentally was almost, at almost zero. So in Bitcoin's history, Bitcoin has actually gone to zero in the past, believe it or not. But anyway, so from the low, so we'll call the low the zero up to the up to the high, you'll notice that when the retracement comes back down between the 78.6 and the 88.6, that's where you tend to get your consolidation before you end up taking off for the next leg of the journey. So as you can see, if we draw this dotted line here, is me just eyeballing and drawing a line between the 78.6 and the 88.6. But as you can see, the consolidation line there, it's very, very clear to see. The next cycle, so from low to the high again, the retracement again from the 78 between the 78.6 and the 88.6 is, if we draw the dotted line again directly between, you can see that that's kind of the lows of that next range. And obviously we've got the consolidation area here. You will notice, guys, that this yellow line here is a 200 simple moving average. Prior to that, there wasn't enough information, so that's why the line ends. But you can see there actually that the price was bouncing along the 200 simple moving average, which was between the 78 and the 88.6. Okay, so interesting to see as we move on to the the next point, the next cycle. So low to high, same again, 78.6 to the 88.6. Draw a dotted line between the two, and sure enough, you've got the consolidation zone here before the next lift off. And you've got the 200 moving average acting as support there. So just note, guys, that the 200 moving average is acting as support here and also here. Okay, just note that because we'll come to that in a second. And so this is where we are today. This is the most recent point of the cycle. So low, and supposing that 69,000 was the high for this cycle. So low to high, again, 78.6, 88.6. The dotted line, between the two actually takes us to the peak highs here of this peak, which is at around about the sort of 13,800. So let's say 14,000 for round numbers. So there are some indications that we'll come back down to this level around about the 14,000, but I don't think we actually will in this instance, and mainly because you will notice that the 200 moving average is actually much higher. So in the past, when we're in these consolidation zones, you can see that the 200 moving average is acting as support for price, and that's how we are now. The 200 moving average, actually, we're below the 200 moving average as we speak now. So I mean, all eyes are on this week's close, guys. We want to see the weekly close above the 200 simple moving average. So 200 SMA. Bear in mind we're on a weekly time frame here at the top. But the 200 weekly SMA is currently at $22,349. We are way below that now, as you can see. But the thing is, guys, this is a weekend. It's weekend price action, and as we all know, what with low volume and things, this is when we tend to get the whales manipulating price over the course of a weekend. Added to that, in actual fact, the US markets are closed tomorrow, so there's a bank holiday in the States, so the US markets are actually closed tomorrow, so they won't open until Tuesday. But aside from that, the rest of the world, the market's open as normal. It's just the US market that isn't open tomorrow because of the bank holiday. So so I mean, this would be the perfect weekend for the manipulators to start to fool us around and start to really dip price down and really start to make everybody feel like it's all doom and gloom. But what you'll also notice, guys, on this this chart here, is I've since drawn. If we look at the wick low here, okay, and the wick low here, you'll notice that I've now drawn this support line, which is the dotted support line, and look exactly where it's headed. So a couple of things, guys. I mean, I did say that I thought 18,000 was going to be the low. We did get a little bit below that. So $400 below that at the moment currently, and obviously what we're looking for now. People are saying that we've broken the previous all-time high in Bitcoin, first time ever, and and this, that, and the other, and it was big news and things. But fair enough. I mean, let's just have a quick look on a daily scale. Where did we close at yesterday? So yeah, I mean, sure enough, yesterday we did actually close 18.95. 18.951 is the price there. Yeah, at 18,951. So the red dotted line here, the red price 19,18128 was actually the candle body closes of the high from the previous high. So obviously you got the cycle high just below 20,000, but the candle body highs for that part of the the um the price action there is actually 19,128. And to be fair, yesterday we did get a close below there. So that is a little concerning, but you will notice at the moment currently that the support is holding there. So what we're looking for at the end of this week is obviously a nice bounce, and to get back above on a weekly scale. Go back to the weekly, is to get back above that 200 weekly moving average. That's what we want to do ideally. Um, as you can see there, so 22,350. It sounds like it's a million miles away. I mean, we're at 19,300 at the moment. So that is a $3,000 move, which is significant. It is, you know, it is significant. But having said that, if you look at the size of this move that we've had here, all kind of, mostly, at the weekend, you can see actually that this candle already is somewhere around about a sort of $10,000 move. So the candle body high there was 26,800, 26,850, and the low was 19,400. So that's an incredible move to the downside, as you'll know, guys, and no doubt that you've all noticed it. But what I'm trying to say is it's nothing to stop us bouncing back up above the 200 moving average and closing above that 200 moving average at the end of this week. It is still possible. We may have to wait and see what the market does on sort of Tuesday, because Monday's going to be a bit skewed again, what with the US market being closed. But let's see what happens. Certainly, in the past, guys, just bear in mind, you'll notice here, for example, you did have a close below the 200 weekly moving average there on that instance, that it did close below, and then the next week we popped back above. So it may be that, that perhaps we close this week just below, maybe, and then it keeps us guessing into next week, and we get something similar like that's happened here, where we get a close just below, and then everybody then at that point will have been expecting continuation to the downside, no doubt. And you can see from the wick there that we sort of came down to sort of get close to testing the lows of that wick. It wouldn't surprise me to see something like that again, where we close just below, and then we get like a start to come back down, maybe test the support again, and then obviously, and then we get something like this, where people are least expecting price to then just sort of take off. I don't, I think that there's a couple of CME gaps above us, guys. There's one at 29,000, and there's also one at 36,000. Um, I've been saying it for a long time now, guys, and I'm going to continue to say it because I still do think that we are going to get an alt season into the summer. Okay, I really do think that, and I think that although we're now at the lows, provided we don't sort of break down and start seeing candle body closes down below sort of 17,000, I mean that would be that would then suggest that we are going to see that the 14,000 mark, and possibly even a little bit below that. But as things stand now, guys, we are hovering around the previous all-time high. Yes, we did close yesterday below the previous candle body highs, but we are still in the vicinity. And for me, this still suggests that support is holding. So previous all-time high support is holding. The 78.6 there is obviously a key retracement that you're very likely to get a bounce from. And also you've got this long-standing support line here. So there's a lot of support here, guys. And I do think, and obviously the 200 simple moving average being above us will be drawing price back towards the 200, back towards that level. So just bear in mind, guys, that that's what I think is going to happen anyway. And I think that that once we start to gather some momentum as we climb higher, we certainly will, perhaps close that 29,000 CME gap, and then maybe even get continuation higher to close that 36,000 CME gap, and that area then, this vicinity then would then create the summer alt season into the next few months. But I do think that we are going to get a test of the lows again, sort of later in the year, as I've been saying, September, October, November again. So we're looking something like this, where we get on a we're going to get something like like this perhaps, and then a stab below, and then off into the races. So we're going to see something like this, I think, in my opinion, and also you'll notice as well. That if we go by the candle body high, though, we are going to get, so it would make sense that we come up to this, to this trend line and then come back down, September, October, November time. And again, this will be then the summer alt season that we're looking for here in the price action from the bounce here. I still do think it's going to happen, guys. I know that I was saying it's going to happen when prices were, kind of in this vicinity. But incidentally, guys, let's just have a quick look at some other things. If you notice, if we go to the okay, guys. So if you look here, we are well below logarithmic bands. We've not been below the logarithmic bands ever in the history of Bitcoin, up until the point, obviously, of March 2020, and we all know what happened then. But aside from that, we've not been below that logarithmic band previously. And I think, if we just zoom in, it's interesting to see when we zoom in, because the point of the lunar collapse, the UST depeg, and all the rest of it happened just at that point where we start to get the breakdown. So just at that level there, so you see where we start to get that breakdown. That's the 4th of May. It was a little bit later than that, so it's actually the 9th of May. But there's the 9th of May for you. And if I just move that line out of the way, you can see exactly what happened to the market then. So, for me, the market dynamic changed massively. And that's why we're well below the logarithmic band. That's why, we didn't get the break higher from the charts that I was sharing previously, and get the summer alt season, before now. But I do think this demonstrates perfectly just how much chaos the UST collapse caused. Interesting, you'll also notice this chart's been around for a long time as well. But you'll notice now we're right in the depths of the lowest blue band, which this chart, the guy that put this chart together has called the basically a fire sale. Once we're into this dark blue territory there. So again, if you look at what's happened on the history there, guys, there's been plenty of nice bounces in the past. Once we get into these blue territories here, nice bounces and continuation higher. So we are in the lows, the depths of the lows. And also, if we have a look at the pure multiple, this is very interesting as well. You'll notice here, so on this level here, that's where the March 2020 happened. So that's March 2020. So that's this point here. Okay, so you'll see actually that we are much lower now. Here we've got a much lower read than even from March 2020. And you can see, guys, once we get inside this this green box here, you'll notice that anytime we've got into this green box, so the blue, the blue dot, the blue line is the Bitcoin price, and the pure multiple is the red, the red indicator at the bottom there. But once you get inside this green territory, on the red line, you'll see with the Bitcoin price, you get the moves higher on every occasion. So every occasion we're in this green price, and you'll see you get the moves higher off the back of that. So we're in the depths of the green again. So it would suggest that we are going to be in for some nice price action coming. So the pure multiple, guys, just for those of you that don't know, if you do go over to look into bitcoin.com, this is just one of the charts, and there's various charts on that site. I do recommend it. And if you scroll down, it does tell you all about the chart and what it's measuring there. But basically, it's to do with the miner revenue. So daily coin issuance divided by the moving average of the 365-day moving average, basically. So yeah, so it's an indication of miner revenue, basically. But in short, once we're in the red territory, you tend to get the prices coming down, and when we're in the green territory, price starts to go up. So as you can see, when we're in the red territory up here, that's when you get the peaks of the cycle. So looking at the blue line there, so when it comes down. So when we're in the red, you get the blue price coming down. In the red, blue price coming down. In the red, blue price, in the red, blue price coming down. And just starting to tip into the red actually, and then the price started to come down. You'll notice we didn't get into deep red territory in this part of the cycle, which again is another interesting point, and probably why people were expecting the 100,000. We got the 65,000, and when we were at the 69,000, people were expecting much higher, and that's probably a lot to do with the fact that we were nowhere near the red zone on the pure multiple, and there were other indicators that were suggesting that we were going to go higher from there. But yeah, there are lots of signs, guys, that the lows are in. So it's very difficult to call the exact price for the low. I'm not going to even try to do that. But as you can see, guys, hopefully I've demonstrated quite clearly that there is a number of different signals that are suggesting that we are at or very close to the lows. I will mention again, guys, that if you look at these vertical lines on here, that's when the RSI has got right down to the bottom of the purple box territory. So basically into the right into the depths. So the as you can see, each time that the the RSI has got as low as this down the bottom here, you'll notice that that the price action has taken off after that's happened. Not immediately, admittedly. We get some sideways consolidation, so don't think that this is a weekly chart as well, guys. So don't think it's going to happen immediately. But this is another indication that we are at the lows or very close to the lows of where we look back and we're looking at something like these two scenarios in the future of where the price is now. And also, if I just go onto a monthly chart as well, guys, what you will notice on the monthly is the RSI here at the bottom. You'll notice is actually, if I just show you there on the with a dotted line, you'll see that the RSI now is actually lower than it's ever been on the monthly scale. So very, very powerful signal there. Again, suggesting that at least that a bounce is imminent and the lows quite possibly are potentially in. So hopefully you've enjoyed the content today, guys. Thanks ever so much for watching and listening. I appreciate each and every one of you actually, and I really, I really thoroughly enjoy sharing my thoughts with you. So thank you for giving me the opportunity, guys. Please do like and subscribe, share the video with your friends and things, and comment below. And I look forward to speaking to you again tomorrow. Always remember, guys, take profits and buy something real. And I'll speak to you again tomorrow. Take care, guys. All the best.